Oil, this probably isn't helping. Oil slipping after a 9-day winning streak on weaker than expected data from China. Got winter demand concerns now outweighing extended supply cuts. Whether oil can maintain its momentum is now in question. Let's bring in S&P Global Vice Chairman Daniel Yergin. Daniel, have you been surprised, given the news that's been coming out of China? Have you been surprised at the strength in crude?
Well, I think this, if you went back to last spring, everybody thought oil prices could be around $90 a barrel, but it was because China would have this great rebound. You haven't seen that rebound, and instead what you've gotten is production cuts by producers led by Saudi Arabia, and that's what's bolstered the price. And I think the Saudis like delivering surprises to the market and catching out financial investors.
What's the key driver besides that? I mean, give me the top 5 things. You got a weakening China economy. You've got production cuts. Did you see the article that Saudi Arabia doesn't like Joe Biden and is colluding to try to drive prices up before the election?
Well, I think there's obviously been tension between the Biden administration and Saudi Arabia. I don't think they're doing this for elections. I think they're doing it for the price. I think the other surprise that's there, Joe, is the strength of non-OPEC production. And all of the demand growth this year is maybe about 2.3 million barrels a day of demand growth. All of that can be met by oil production coming from the U.S., from Guyana, from Brazil, from Canada. The U.S. will add almost 1 million barrels a day of supply this year. So I think that's been a surprise.
So the production has increased, and actually, I think in a speech before, or at least an ad before last night's NFL kickoff, I think the Biden administration ran an ad about how much the president has increased production.
I missed that ad. Wow.
Yeah. Pretty interesting. There's a lot of interesting things in that ad. Cutting the deficit, creating a lot of things, but it's not. The approval rating's not really moving too much. I don't know if people are buying into it, but lead editorial in the Journal about freezing all these Anwar leases. Not only the ones that when he came into office he did 2, but now 7 more, sort of arbitrarily, and whether the EPA is really in a position to do these things, but they are. What would you say right now? Are we doing all we can to drill in the U.S. or no?
No, it's a very mixed picture. On the one hand, the administration, as you're noting, wants higher production when prices go up. At the same time, they have their strong environmental positions and closing off areas. So, and I think that we're only 14 months away from the presidential election, and so high gasoline prices, we'll see that with these higher prices, will certainly be an issue, and we'll hear a lot of squawking from the administration, I think.
Well, I mean, we have, the news out of China. We've got Germany. I don't know how you would characterize the economic environment in most of Europe at this point. And we've got a Fed that, whenever it sees strong economic growth, it looks at that like, we may need to raise rates more. So it just seems like on the demand side, everything is shifting towards, I don't know, what would be bearish for oil. Is the supply side going to stay the more, is that what things are keying off of? A lower supply, and it's not going to be demand?
Yeah, I think that you've had like 3.2 million barrels a day of OPEC plus cuts, and another million that the Saudis have just extended, which is what sent the prices up. And that's really a response to weak economic conditions, to Federal Reserve and other central banks, and of course that the China dream hasn't eventuated. And you look at the latest data from China on exports, except from cars, it's down again.